guys, you're welcome to this video and you're welcome back to the Forex Geek channel. If you are new here, then you might want to subscribe to this channel because we cover a lot of insightful information from Forex indicators to Forex strategies to a variety of topics that are related to the financial markets. However, if you have subscribed already, then you are welcome back to the channel. Without further ado, we're just going to be getting right into what we have for this video. And in this video, we're going to be discussing a custom indicator named Magic.2 MTF Alerts Indicator. All right, this is a custom indicator, meaning that you have to download it from an external source. And after doing that, you have to add the indicator to your MetaTrader file. And after doing that, then you can then load the indicator to your chart. Okay, so I have already downloaded it and added it to my file. So I'm just going to be loading the indicator to the chart right away. All right, so this is how the indicator looks like, the Magic.2 MTF indicator. So as we can see, the indicator gives signals by showing dots. All right, it's a very easy to use signal. It's a very easy to use indicator. So even if you are a complete newbie to trading, or if you have prior experience, it doesn't matter. You can be able to effectively handle this indicator. All right, basically the indicator displays buy and sell signals using visual dots on the price chart. The red dot above the candlestick represents a sell signal, and the blue dot below the candlestick represents a buy signal. Also, this indicator offers multi-time frame alerts. Okay, that is the reason why the indicator is called Magic.2 MTF Alerts. The magic dots, as you can see, can be explained by the fact that the indicator used dots to give you signals, right? And then the MTF alerts shows that it gives you multi-time frame alerts. Okay, you can use this indicator on any time frame and you can be able to get alerts and find signals accordingly. All right, so it doesn't matter whether you are a scalper or a day trader or a swing trader, this indicator can be a good addition to your trading toolkit. And then another interesting part of this indicator is that you can use this indicator both for trend following strategies and for reversal trading strategies. Okay, you can also use this indicator in a ranging market. All right, you can use it in a consolidating market. So it doesn't matter your style of trading, this indicator can actually be a good addition to your trading toolkit. All right, so now let us just go straight into how to make use of this indicator. We have already seen that the indicator is quite easy to use. When you have a blue dot below the candlestick, it simply means it's time to buy. And when you have a red dot above the candlestick, it simply means that it is time to sell. But one thing that you should know is that it is not good to rely on just one indicator. So ideally, you should consider making use of other indicators to confirm your entries and your exits. And you should also make use of support and resistance zones. Okay, plot support and resistance zones on your chart because they are going to give you insight as to potential reversal zones. Okay, you don't have to wait for the indicator to tell you when to exit your trade before you exit, because sometimes indicators can be lagging. All right, so for example, you can see that we had a buy signal here. All right, we had a buy signal here, and the next time we had, because this was a buy trend, right? This was a, okay, we had a resistance here. This was a buy trend. Okay, and remember that price does not move in a straight line, so we usually have pullbacks. Okay, so if you are a scalper, for example, or an intraday trader that opens multiple trades, you can enter a buy here, you can sell here, and you can enter another buy here, and you can sell at the next resistance and enter another buy after the pullback and sell at the next resistance. That is if you are an intraday trader that opens multiple trades, right? There's not just one trade from the beginning of the day and close at the end of the day, okay? Because your style of trading can be different, okay? So now, if you are a kind of trader that opens multiple trades and you entered a buy trade here and you closed your buy trade here, this would have been a good place to enter another buy trade. But if you had entered only based on the signals given by this indicator, then you would have been in only one trade from this point up to this point. All right, you wouldn't have exited within this bullish move, not even once. So it depends on your style of trading. You can actually decide to determine your entries and exits based on the indicator alone, or you can decide to use support and resistance zones to break your trades as the trend moves in one direction. All right, so let us look for another example. And we can see this is another example that we have here. And in this example, we can see that we had the dots forming at the different points. So we had a buy signal here and we had a sell signal here. Okay, so in this case, if you wanted to open multiple trades, the indicator was telling you when to enter and when to exit, even in the direction of the trend. Unlike this first example that we looked at, that the indicator did not give you any exit points within the bullish move. So it depends on your trading style actually. Now in this case, if you wanted to open multiple trades in the direction of the trend, you can enter here, you can close your buy here, you can enter another buy trade and close here, enter another buy trade and close here, enter another buy trade. So you're going to, and at the end of the day, you'll find out that you will catch more pips compared to entering just one trade from here all the way to this point. All right, so that is the difference. Okay, but it doesn't mean that you must break your trades into parts. Okay, it's not necessary. It depends on your trading style. All right, and then in a consolidating market, if you want to use this indicator in a ranging market, let us look at an example for a ranging market. For example, what we had here. All right, we can see that you have a buy signal here and you got a sell signal here, a buy signal here, sell, buy, sell, buy. So you can be riding the wave from down to up and from up back to down and back to up. So in a consolidating market, when you enter a buy, you set your stop loss below that swing low, right? And then you target the next resistance, or you just wait for the sell signal to pop up. When the sell signal pops up, you exit your buy, you enter a sell, you set your stop loss above the high, you wait for the buy signal to pop up, because sometimes the price might not get to the support or the resistance, you know, the wider resistance and support. So you can just wait for the buy signal to pop up and you exit your sell. You wait for the sell signal to pop up and you exit your buy. So it's quite easy. It's very easy, straight to the point. All right. Now, in terms of confirmations, in addition to the use of trend lines and support and resistance zones, I will recommend that you also try out other indicators such as the relative strength index or stochastic indicator, any other momentum indicator of your choice. The reason why I'm recommending a momentum indicator is so you can gauge the momentum of the price action, all right, and you can check out oversold and overbought zones. Okay, now in addition to momentum indicators, you can also use moving averages to confirm your trades. All right, you can decide to use any indicator of your choice. Actually, it's not limited. You can use any indicator that you are more comfortable with, just for the sake of confirmations. So for example, in this case, we can see that when we had a sell signal here, the RSI confirmed the sell because the RSI was showing selling momentum. Okay, you can see how the RSI was trending downwards. And then in this case, this is a consolidating market. All right, it's a consolidating market. So the RSI is not exactly best used for this kind of condition. Okay, but we can see that when we had a buy signal, the RSI was also trending upwards, confirming the buy momentum. Here again, the RSI was trending downwards, confirming the sell momentum. But let us go to a trending market, and we can see that all the way from this point, all right, to this point, the RSI was trending upwards until it entered the overbought territory. Then during the period of this pullback, you can see that the RSI dropped down, and then there was a continuation. So along this line, you can be in a buy trade until the RSI entered overbought territory, or you can be getting your confirmations. If you are entering multiple trades, right, you can be getting your confirmations with RSI as it was going up and coming down, going up, coming down, but still trending upwards. And then after we had this pullback, you can see that the RSI also began trending upwards again, confirming the bullish momentum. All right, so basically that is how to use this indicator, the magic dot 2 MTF alerts indicator. All right, when using this indicator, make sure you observe good risk management. Do not trade with an amount you can't afford to lose. Make sure that you do not risk more than 2% of your capital in one single trade. It's all for the sake of preserving your capital. All right, because capital preservation is as important as profit making. So do not end up blowing your account in the bid to make profit. It's not a wise decision. All right, I hope you found this video insightful. If you did, kindly like and subscribe for more trading insights, and do not forget to hit the notification bell so that you do not miss out on more trading videos like this. In the meantime, thank you for watching, and I hope to see you in the next video.